So we're just taking a quick look at the Guru Focus page for AutoZone. On the main page here, you can see a medium warning sign and two good signs. So let's just take a quick scan, see what those are, and see if we need to do a little bit more research into this business. So medium warning sign tells us here that it is issuing long-term debt and generally seen as something that you need to be cautious about. So it's been issuing new debt over the past 3 years. It issued over $500 million of debt. Overall, it thinks that the debt level is acceptable. And this is probably because its interest coverage still looked okay. But let's look at the details and it'll give us a description. So over the past 10 years, you can see the long-term debt and capital lease obligation has gone up steadily. So no sharp increases here, but still going up. And you prefer not to see that go up quite that much. But anyway, this is something that deserves quite a bit more research to look into exactly what this is and what the makeup of this debt is. So that's a medium warning sign. No severe ones, so that's the only thing that it is cautioning us about. Two good signs. So obviously a good one here is revenue per share is going up, and you can see with AutoZone it's quite consistent. This has been a company that's been growing wonderfully over the past 10 years, and no real signs of decline in revenue at the moment. So the other good one is an expansion in operating margin. So this is very good as well. So this is a fun one to get into some of the calculations, and Guru Focus is awesome is great for showing you exactly what numbers go into the calculations. But its operating margin as a percent is in the high teens, just under 20% for August 2017. And so it shows you briefly what the calculation is here. That is operating income divided by revenue. And what is operating income? That's revenue minus cost of goods sold, minus selling, general, and admin expenses, SG&A, minus research and development, minus depreciation, depletion, and amortization, all divided by revenue. So if you really want to get into more detail, you click the button. And so in this section, it's going to show you the more detailed calculations on operating margin. So you can scroll down, read some of the definitions, see the trend over time. So at least for the past 10 to 15 years, it seems to be pretty steady, and shows you what the actual margin was for the past 10 years. And scroll down just a little bit more, it gives you the actual calculation. And these numbers all come right from the filings, the SEC filings for this business. So you can see right here, operating income divided by revenue will give us the operating margin. This one is for the quarter, 18.1, ended November 2017. And then the last annual information they had was for year ended August 2017. So 19.1. So a good margin there. So we'll quickly go back to the main page. And so there's a warning sign, two good signs, and obviously a ton of other information that's worth looking into. So that's looking really quickly at the warning sign and the good signs for AutoZone on the main page here for Guru Focus. If you're interested in looking into it a little bit more yourself and getting into the details of some of the other ratios or the numbers or the filings, please feel free. Take a look at it, click on the link in the description, and you can find some of this information yourself and look into some other businesses as well. Thanks. Bye for now.